Greetings everyone, and a warm welcome to this presentation of the result for SpareBank 1 SMN's second quarter of 2025. My name is Trond Søraas, and I will take you through the main features and figures of the results of the second quarter of 2025 and the first half of 2025. The second quarter was yet another strong financial quarter for SpareBank 1 SMN, delivering a result of just above 1.1 billion and a return on equity of 16.2%, contributing also, of course, to a very solid first half of 2025 with a result of 2.134 billion and a return of equity of 15%. For second quarter, the net interest income remains high. And as expected and in line with seasonal effects, the quarter is positively impacted by strong contributions from both our accountancy and real estate brokerage firms. Improved results from ownership interests and low losses are also contributing to the strong results. And to the extent that there are one-off effects, they are on the cost side, where we have recognized expenses of 47 million in the quarter as a result of the Tietoevry verdict. After the implementation of CRR3, the CET1 ratio is at 18.8%, leaving ample headroom to the long-term target of 16.3%. Lending growth in the quarter is characterized by an improvement in demand within the retail market throughout the quarter and especially towards the end of the quarter, whilst corporate lending growth is a bit more volatile, with the second quarter growth being a bit muted, but the 12-month lending growth is at 4.4% for our corporate division. Deposit growth is at 0.9% in the quarter, and the growth is especially strong within retail banking. As mentioned, our subsidiaries delivered a very strong second quarter and in line with expectations. Our leasing and car loan company, SpareBank 1 Finans, also performed well with a return of equity of 13.0%, which is very strong for a company that doesn't rely on deposits for funding. We are continuing to deliver on all our long-term financial goals with a return of equity exceeding the 13% long-term target, while we are remaining the solidity to deliver growth and dividends to our owners. Cost income this quarter is negatively affected with 3 percentage points, affected by the above-mentioned cost to the Tietoevry verdict of 47 million. Looking at the retail banking in particular, the lending growth for the quarter is in line with the corresponding quarter in 2024. The 12-month lending growth is at 4.7%, well above the national credit growth to households. The deposit growth in second quarter is affected by the holiday allowance pay, but the 12-month growth is also very strong at 10.6%, which improves the group's funding to stable and relatively inexpensive funding. When it comes to margins, they are affected by a slight increase in the average NIBOR in the quarter, and we continue to focus on profitability and dampening the margin erosion. The reduction in the key policy rate from the central bank in Norway in June 2025 was followed by a lowering of interest rates for our customers, which will take effect from the 25th of August for existing customers. In the corporate market, the 12-month lending growth is now at 4.4%. For the second quarter, the lending growth was 0.9%. As said, somewhat muted, but as previously mentioned, the corporate market is more volatile than the retail market. The reduction in deposits is due to letting larger high-priced deposits go in the quarter. Looking at the main lines in the profit and loss statement and compare them to the first quarter of 2025, we see that the net interest income is up 1.1%, driven by one extra interest rate day in the quarter and a solid lending fee. Real net interest income, where we take into account received commissions from loans transferred to the covered bond companies, is also up from the previous quarter. However, adjusted for the number of interest days and the extra lending fees we see in this quarter, the level is about unchanged from the last quarter. A strong quarter when it comes to commissions, driven mainly by a strong quarter in the housing market and a seasonally strong income from accountancy services. Overall, this gives operating income just north of 2 billion in the quarter, which we are very pleased with. Operating expenses are affected by the accrual of incurred costs to Tietoevry. Loan losses remain low, with 32 million in this quarter, corresponding to 5 basis points, reflecting the robustness of our loan book. It is especially nice to see that the results from SpareBank 1 Gruppen is improving, which gives an increase of 80 million in the contribution from ownership interest compared to the first quarter of 2025. Overall, we are delivering yet another quarter above 1 billion in net profit and a return of equity of 16.2%. So a solid quarter on all fronts. SpareBank 1 SMN is more than just the pure lending and deposit banking operations. We have a very high share of income stemming from something else than the net interest income, which we believe creates a robustness in earnings, while our customers can use SpareBank 1 SMN as a one-stop shop for broad range of financial services. The second quarter was a strong quarter for commissions, driven by seasonally strong contributions from accounting and brokerage. There are some changes in the commission models, as noted in the first quarter presentation, but overall, we are very pleased with the development in total commissions income. Looking at the costs, group cost for the quarter is increased by 58 million Norwegian kroner compared to the first quarter of the year. This is mainly driven by the aforementioned accrual of incurred costs to Tietoevry, and there are some cost increase in the real estate brokerage and our leasing company, where the brokerage firm is affected by changed accounting for commission pay. Costs continue to be a key focus area for the group as a whole, and especially for the parent bank. As mentioned, we see an increase in the profit share from SpareBank 1 Gruppen this quarter, driven by improved results in the insurance company Fremtind. BN Bank continues to deliver solid results, while we see results from SpareBank 1 Markets is somewhat muted due to the slow ECM market, which is cyclical. Strong asset quality is a key to delivering strong results over time. We have another quarter with single-digit loan losses in BIPs, meaning 8 of the last quarters are now below 10 basis points. The loan losses are distributed in this quarter with 21 million to corporate banking, 2 million to retail banking, and 9 million to our leasing and car loan company, SpareBank 1 Finans. We see a slight increase in model impairments due to growth across all sub-portfolios and higher volumes in stage 2 of the corporate portfolio in the parent bank. So a few words about solidity. We have a strong solidity situation at the end of the second quarter, following the implementation of CRR3. Based on estimates, the risk weight floor on mortgages that will take place and took place effect of the July 1st, the CET1 ratio will decrease by approximately 1.3 percentage points following the implementation of the regulatory floor for risk weights on mortgages. This would place us about 7.5% at CET1 ratio, still giving ample room for delivering on both growth and continued dividends to our owners. In summary, SpareBank 1 SMN has completed yet a strong financial quarter and a first half of 2025 with a return of equity of 16.2% in the quarter and 15% year to date. We are pleased with almost all parts of the group, but we remain focused on limiting the cost growth in the banking operation especially. We continue to improve our standing in the region by leveraging our local presence, expertise, and over 200 years of history. Our subsidiaries are delivering revenue growth, and SpareBank 1 Gruppen has a positive earnings momentum. We believe the trend of structural changes in the Norwegian financial sector will continue, and we in SpareBank 1 SMN is well positioned to be a key player for consolidation in Mid-Norway. Thank you.